Yeah, we're doing pretty well. Getting ready for Walmart this week.
Yep,
let's
us
take a
too.
step back before we get there and just talk about the macro environment, because I can kind of predict what we're going to hear from Walmart. Higher end consumers going to shop there, trading down. People are more choosy with what they're buying, but you know, who knows what they'll say. But that's the macro environment that we've been in.
They're
for a
certainly
few
the best
quarters.
out there, and we've seen their sales numbers be very good. It wouldn't surprise me if there's some margin upticks that they can have in 2026 would be positive. But most of all, keep in mind, you've got a new leader running the ship there. Even though he's a tenured executive there, still someone new besides Doug McMillon.
Well, let's stay with Walmart for a moment since we went there. I mean, they are the behemoth, right? And as Tim mentioned, so right, when you think about the K-shaped economy, increasingly consumers on both legs of that K are shopping at Walmart. I am blown away, Dana, and I think we've talked about this. Shares of Walmart are outperforming the broader market by a lot this year, up about 15%, and I think the S&P is a little bit lower. They gained 23% last year, outperforming the S&P, which was up 16% in 2025. So what is it that they are doing so right that they finally kind of have figured out more broadly?
I think overall over the past 10 years, and you could really look at it as the legacy of what Doug McMillon did, he set them up for the future, which is now. That future, which is now, whether it's technology, whether it's the blending of online and physical stores, whether it's the assortment that they have, being able to appeal to high end and low end. And I think what's the next iteration going to be? I think we're going to hear more and more about AI, anticipating the needs of the consumer. Big companies always have more dollars to invest.
Yeah.
Smaller companies will learn from the attributes of those larger companies.
How's the e-commerce business doing at Walmart? And I asked because last week I ordered something from Walmart Plus for the first time in a while. I needed a single windshield wiper, okay? This thing was like $14. It was coming the next day. It shows up in a box that's 2 feet by 1 foot by 4.5 feet.
Oh my God.
And it was sent via FedEx. And I thought to myself, they don't have this figured out. Or they ran out of this cost the company
More.
so much to ship to me.
I think overall, we're seeing that not just from Walmart, from a lot of companies. They're still in the midst of being able to figure that out. But overall, stores are still a greater part of the business than online. Online may be growing faster, but it's not on the same base as physical stores. But also, one of the things you're seeing is speed matters, and look what you did. You got your package the next day.
Well, is it that Amazon model of like hook you, get you connected into their network so that all of a sudden it's not just the windshield wiper that you're buying, but you're buying so much more?
Yes, because also you're a Walmart customer to begin with by the physical stores that you're comfortable with it. And the other thing that we've been hearing lately, packaging improvements are underway at a lot of the different online retailers to make sure that the packaging is clean and convenient. We'll have to see what happens to your FedEx box, though.
It's getting recycled tonight.
Yeah, I can only imagine what that cost. More broadly, like Tim said, we did kind of want to start a little bit broad with you. I mean, we got U.S. retail sales unexpectedly stalling in December, suggesting consumers provided less firepower for the economy as the year drew to a close. On that print, did your own analysis, Dana, you know, you do great channel checks and you have all your own research. Did it match up with what
we saw a solid holiday season. We've seen
all the way through.
4.5%. It was weaker after Black Friday to Christmas. It only picked up like the week before Christmas. The lull in the middle was deeper than expected. Coming out of January to now, keep in mind, we've had terrible weather. You know better from the Northeast and the Midwest, people getting out pretty tough, and it was all about colder weather goods. So it's up and down, but I don't think anything is taking away from what we call the measured optimism in the consumer space, whereas when you think about the events this year, Winter Olympics, America 250, World Cup, all coming up, and tax refunds, which are just starting now, consumer has a lot of firepower to spend, and we're watching carefully the lower end. We just came out with our credit monitor this week, or today actually, because this week I keep forgetting that yesterday the market was closed. The credit monitor, which shows delinquencies are still on the rise, bad debt being impacted, you have student loans out there. So it's still upticking, but not at a real accelerated pace. It's something to be mindful of.
When would you go from being mindful of it to being concerned about it?
If I heard about a slowdown in sales from all the different types of retailers, I mean, I think this year, could it be a discretionary year? We've had legacy companies like Victoria's Secret, like Urban Outfitters, like The Gap do better. Why? Because there's newness in product, newness in store designs, making it very compelling. So I'm watching some of these sales figures to see that, are they able to maintain the expectations? What's gone more into the back burner, the waning impact of tariffs. Tariffs will be an impact for the first quarter, but they won't be as big an impact through the year. And the continued focus on newness means companies are putting out newer products. You don't have a comparison, so the prices may be higher than they originally would have been.
I want to go back to the consumer credit picture and delinquencies, because on the same day we got that retail sales report, we got delinquency rates on loans rising to 4.8% of all outstanding U.S. household debt in the fourth quarter. That was the highest level since 2017. I hear something like that, and that's almost 10 years. It makes me be like, whoa, wait, is that impressive? I mean, is it impressive? Like, how do you make sense? And I think they talked a lot about delinquencies in mortgage payments, particularly in lower income zip codes, student loan delinquencies. Like, that's a real factor.
They are real factors. It's very important to watch. That's why let's see what these tax refunds come in, because what will it be used for? Some of the debt pay down that's out there.
But to be fair, like student loans, if you've got student debt, how much of you're going to get in a tax refunds is really going to make a dent?
It doesn't make as much a dent, but a lot of times parents will pay off some of those student loans. So it depends who's doing those payments of the loans.
Okay. What?
Just thinking about the cost of education.
How old are your kids? By the time you go, it'll be $1 million a year.
Yeah, just have the bots
be a plumber, be an electrician. I'm just saying.
Okay. Hey, I want to talk a little bit about the Olympics that are going on right now and sort of what it means in a world where media is so fractured and you don't have the same appointment viewing that we had, the same idea of, the big companies getting in front of everyone. We had Nike CEO on last week talking about a return to ACG and making a big push at the Olympics. How do you watch an event like the Olympics when it comes to retail?
I think when you think about retail and what brands are involved in the Olympics, I mean, Ralph Lauren, big time.
You love it. You talk about Ralph Lauren a lot.
Yeah. Well, you know why? Full price. If you look at the average unit retail selling prices, it's going up. You have a smaller brand who is doing good things with Olympics. This is their second Olympics they've been involved with. Figs is outfitting the Team USA medical team. And that's something that they're becoming known for. I think there is awareness that comes from being part of the Olympics. I think people are watching the Olympics, even though with some of the different time zones. Winter Olympics, whether it's figure skating, whether it's the luge, you name it. There's a lot of good USA athletes that have done a really good job.
Does it still move product?
Yes, it moves product and people want to be a part of it. Even just walk by store windows and you'll see product out there for the Olympics.
So against all of this, the Saks bankruptcy, I know it was expected. Eddie Bauer, been around for a long time. I feel like it's been twisting in the winds for a while. Store closings of Allbirds. I mean, I found my pair of Allbirds. I haven't been wearing them much. But I mean,
Francesca's another one.
Yeah. Significant, or it's just the cyclical nature?
Cyclical wave. When you think about what others are doing out there, more stores are opening their own brands. You have companies like Aritzia, who's gaining share, only 72 stores in the United States. So if old doesn't reinvent, they're going away. And that's why I mentioned before, look at legacy that's reinventing. Urban Outfitters, Victoria's Secret, and The Gap.
What? No, it's fascinating to see, because I agree with you that things are just going to change, right? It doesn't mean when we see a closing, it's going to be the end of retail.
Well, the other thing, talking about the retail real estate landlords, Simon Property, largest small developer in the country, just put out their results last week. And you can hear it from all the other landlords out there. There is more demand for space than supply. So even with the 57 or so Saks Off Fifth closings, the 8 or 9 full line closings, there's demand for this space.
Is it high end, though, that's always demand when it comes to malls, or not necessarily?
No, because you take a look at things like, look at the off-pricers, the TJ Maxx, Ross Stores, Burlington, they're each opening 100 stores a year. Restaurants are opening new stores. Look at the dollar stores, the Dollar Generals, Dollar Trees. They're also opening
We just did a
stores.
story about how they're opening increasingly in wealthier areas, and because the wealthier or higher income individuals are shopping at these stores.
People like treasure hunts, and that's what this gives them.
Okay, we're going all over.
I thought you were going to go to the ultimate treasure hunt.
No.
Which I love, but you go
we're
ahead.
not doing that yet. You mentioned Gap, so I want to go back to Gap. And I'm now hearing from truly from influencers that Gap, and you I think you came in and told us that Gap is back.
It's cool. Yeah.
What has Gap done and been able to do in recent years to sort of it'll never, I'll never say never, but the 90s for Gap were unbelievable.
So now it's the parents and the kids they attracted, and the reason why, how brands are getting recognize today. Look at how viral things can go with influencers, brand ambassadors. You look at Instagram. The regular person is now your new celebrity who you want to look like them. What Gap's done, their creative director of Zach Posen partnered with Richard Dixon, the CFO. They blended product and marketing, and what did it give them? Awareness. They did that with whether it's K-pop music stars all of a sudden. You're doing that with different brands out there that they're making special collections for Gap. And they're also updating the stores. Check out the store on 21st and 5th Avenue, which has the new look Gap. It doesn't look like the old look Gap.
Huh.
So where is retail going? Like, I always think it's kind of wild. You go into a Zara and you can check out yourself and and part of me kind of likes that, I can just do it. But where is retail going in terms of trends, in terms of technology, in terms of the experience?
I think overall, where retail is going, it's where you want it to go. I think the personalized nature of retail, because of the data that companies have about your preferences, I think the AI learnings that are being put in place as to when you shop, what price you shop, what style you shop. And I think the marketing appeal of what's on Instagram, what's your favorites, and what is celebrities' favorites, or who the new celebrities are, they become your favorites. I think it's moving faster than ever. It's made the supply chain of retailers become more embedded in being able to chase. And I think overall, you look at old brands becoming new again, walk across the street to Bloomingdale's, there's more new brands than they've had in years.
I was just talking about that with a friend of mine who's just like, we talked about the transformation of Bloomingdale's and against Saks, which is obviously struggling. One thing I want to ask you, Amazon, like I have noticed in stories and different things how aggressive they are in terms of fashion. Is that becoming a big deal for them?
Not as big a deal yet. They're still essentials. But what you are seeing is brands want their own Amazon shops on Amazon. Basically, what brands want today is they want where's the customer so they can interact.
Even though Amazon might copy like what's popular, I mean, they have so much data on what's where people are buying.
Why do people buy Levi's jeans or buy Calvin Klein jeans or wherever? People want the brand and the fit. So they'll always be private label, but brands provide the halo.
Can we talk big picture a little bit with like a company like Lululemon, for example, going through CEO transition? You have Chip Wilson out there saying, you need to, I have good ideas for this company.
Right.
You have some product failures that our Bloomberg News team has reported on with this idea of some of the leggings being see-through. Is that brand on the outs?
The brand, obviously, if you're not going to have product that people want, that's a problem. But overall, you can't say it's on the outs because look at the amount of volume that it does with over $10 billion in sales. You look at the other activewear brands, and they're not doing nearly that volume. And there's work that needs to be done to reinvent. I always call it to be at the top of a retail roller coaster. You need to reinvent, re-merchandise, and rejuvenate. Time for Lulu to do that. And I was just out there recently. New product is coming for this spring. Let's see how it does.
Is the competition with like Alo and Viore, is that overstated?
I think that is overstated. I think it's more of there's new trends out there. Take a look how many people are wearing denim jeans right now. I think there's
even some people working out in denim jeans, like the Secretary of Health and Human Services. When he hits the gym, Carol, he wears jeans. RFK Jr.
Not comfortable. I know you're talking. I know.
There's like pictures
of him. Are you sure they weren't like? Oh, there are those leggings that look like jeans. I'm just saying, which is a big thing right now.
Sorry, Dana, I interrupted you with my.
People like denim, and you know why? Think about post-COVID, people going out again. Look at these events we talked about. So they're dressing up more. Activewear needs the newness in order to get people not just to work out more, to wear new things to work out.
So what about so Walmart's the big focus this week in terms of earnings.
Yes.
Next week we get Home Depot, TJX. Week after we get Target, Costco, Macy's, and a whole host of others throughout the next couple of weeks here. TJX, again, I know this is...
Here we go.
They should be...
I like the treasure hunt. What did I tell you?
They should be a barn burner. The other thing that's new for them, they're increasing their spend on marketing. And as they've been increasing their marketing spend, they're seeing more traffic in the stores. So look what we talked about with Gap, marketing and product. Look what you got with TJ going on. No one would have ever thought that marketing would be as big a deal for them. It's turning into revenues. And let's not forget the other thing TJ has. They have Home Goods. Home Goods is doing amazing. They have the most diversification of product assortment. I think 2026 looks to be a very good year for TJ.
What's so interesting, though, they don't really have an online presence.
No.
It's like just fascinating that they really don't. Because
you got to go to the store.
You have to go to the store.
But that's part of because you can't really like find out what they have,
You can't do the treasure hunt digitally online.
They love it. Yeah. And you have very loyal customers who will be there on Tuesdays and Fridays. They know when the new merchandise comes in. And frankly, having off price only gives iconic heritage to the full price merchandise because you know you're getting a deal on some of these brands. And look at the brands TJ has, they're better lately.
You sound upbeat in terms of the consumer, and I think it's really important. We're going to get an inflation print later on this week, so we're thinking about the U.S. economy a lot. I think we get Fed minutes tomorrow from that meeting in January. But having said that, with consumer delinquencies, does it tell you that the consumer is doing okay, or the consumer is increasingly buying on credit or buy now, pay later?
I call it measured optimism. I feel like the consumer is okay.
Yeah.
We still have very low unemployment, but we still need to see that wage growth and the ability with these tariffs, with price increases. It's being watched all the time. I told you we have a tracker that we track 80 items each week. We've seen prices go up, so you have to be mindful. This isn't just a moonshot. It is every week there's something new.
We were just looking at upcoming earnings. Target is reporting in the early part of March.
March 3rd.
Shares are down about 45% from 2021 highs. We're going to be speaking to Bill Smead a little later on the program. That family has loved Target for years, but they've really failed to deliver for investors for a few years. Can this company be turned around?
You can never say never. You can always turn around companies. Do they have the right strategy in place to be able to do that? Target was always used to be known as Target, where more on the discretionary side. 60% of Walmart sales are groceries. It's exactly the reverse for Target. So discretionary matters at Target. They have to win again in discretionary to show interest.
Yeah, it's fascinating to see what kind of has happened at Target. I think about all of their collaborations that they did with various designers and people lining up. I've been, guilty of doing that and lining up. But they were really interesting collaborations and really put Target on the map. And it's interesting to see how they are struggling. There's just... Earnings is obviously going to be front and center. We're going to hear from Mary Daly, the president of San Francisco Fed. Dana, I'm always interesting. There's got to be a lot of things that you keep an eye on to get an idea, not just from what we hear from the specific retailers, but what are some of the broader metrics?
Take a look, when you think about unemployment, take a look at youth unemployment. Youth unemployment has been very high lately.
Yeah.
Find out what they're thinking about. Take a look at gasoline prices. Those continue to give some optimism. How are they thinking about that? What do you think about tariff impacts still coming? How long will that be? Inflation, where does inflation settle out at?
Right.
Those are all those macro dynamics that lead to the picture of the consumer.
Do you think about the midterms? Like this is something, like in terms of what might come out from White House policy? I know the president's talked about, giving certain checks and so on and so forth.
Checks would be great. Tax refunds would be great. Those are all boosts.
Okay.
But I'm not a political prognosticator.
Yeah. So it's not like the White House and their policy is something to keep an eye on.
Right.
Okay, you're going macro. I'm still going micro, Carol. And I'm going to go to Nike.
Yep.
You at Telsey, you have Market Perform.
Yes.
Christina Fernandez covers Nike, full disclosure. But I'm still going to ask you questions about Nike. We had Romain Bostic, our colleague, was in Milan last week. And he had an interview with the company's CEO. And a big part of the interview was the return to ACG, all conditions gear. And this idea of like, this brand has been relaunched 3 or 4 times over the last 40 years. But he was talking about how it's all about a return to the outdoors and still focusing on, the big sports and the popular sports here in the US, but really trying to get Nike to identify with trail running and those sorts of things. Is that the right move here for Nike?
I think Nike needs anything that's going to show appeal. I mean, we know they've gotten some traction on running with double-digit increases in running. They need to do that with more of their categories and more of their sub-brands. We've heard mixed things about Nike Skims so far, and we'll have to see how that moves.
This is the
along.
collaboration.
Yep. But what Elliot's doing is he certainly has the history and the heritage, and now he needs to put wins on the board. And I think whether it's all condition gear, whether it's any of the other items where he can show an uptick, it's one thing at a time. Look what he just said. He said they're in the middle innings or whatever of their progress. He's got to show to get to the higher innings and show that it's working. He needs wins on the board. So that's what I'm looking for them.
Just to wrap up here, I love in your notes you say, I always use a letter to define what will be the annual discussion points of retail. And for this year, you say it's the letter A.
Right. AI, affordability, advertising, assortment, adaptability. That's what we're talking about. We're talking about AI and what it means. Look what we've been talking about, brands needing to reinvent themselves.
Right.
It's about the assortment. How do they do that and gain awareness? It's about advertising. What about speed to market? It's about adaptability. And affordability, very much top of mind, what that's going to look like in 2026.
Which company does that now yet or not? Like when you go back to some of the favorites, like
TJX does. I mean, they
Carol's
hit all
favorite.
price points.